Welcome to another tax resolution training video from taxmarketinghq.com.
Now let's talk about IRM 5.1.4.3, Jeopardy pre-assessment procedures. Jeopardy assessments initiated by collection personnel are limited in scope. First of all, trust fund recovery penalty assessments, which are actually in a future IRM section that we'll get to probably in a few months. IRM 5.7.6.3, quick and prompt assessment action for TFRP. Employment and excise tax assessments, whether or not the return due date has passed. So again, when it comes to payroll taxes in particular, this is an important point. When it comes to payroll taxes in particular, a revenue officer in collection doesn't have to go to exam. A revenue officer on the collection side can issue a Jeopardy assessment on a 941 tax, even though the return due date for that 941 has not yet come and gone. Okay, this is actually the most common type of Jeopardy assessment I have ever seen. Okay, when you have a 941 debtor that has been pyramiding their liability, in other words, every quarter they owe, and they're not making federal tax deposits, and they're not dealing with the situation, they're digging a deeper hole. Well, if a revenue officer determines that there's something going on with the business that will jeopardize the government's ability to collect on the debt, then even though, like, let's take right now, we're not even a third of the way yet through first quarter of 2019. But if the revenue officer has a case with a business that has had a tax debt problem going back the past 9 quarters, and now the revenue officer believes that the business owner is going to say, forget all this, liquidate all the business assets, and catch the next plane to Brazil, then the revenue officer may initiate a Jeopardy assessment, even though the quarter is not yet over, in order to incorporate payroll for this quarter. Okay, this is the most common type of Jeopardy assessment that I've ever seen. There are also partnership penalty assessments, and this is an interesting one. Income tax assessments when there is no question as to the amount of the liability. Okay, this is a slightly higher provability demonstration threshold that a revenue officer has to make to, yes, Jacob, their group manager. Actually, this goes all the way up to territory managers and area managers. But income tax assessments, when there really is no doubt as to the amount of the liability, where what you'll see here commonly is a revenue officer that essentially assumes that a taxpayer's situation is the same as last year. Same job, same paycheck, same children, spouse, deductions, etc. And they copy and paste the return, basically, is what they do. And that is pretty common for the vast majority of Americans. There isn't a whole lot of year-to-year change for most people. So in those situations, an income tax assessment can be made. But again, it's a slightly higher provability threshold than it is especially for payroll taxes. A Jeopardy assessment will be requested when a determination is made that collection is in jeopardy. And in particular, one or more of the 4 conditions outlined in Policy Statement 4-88 are present. In trust fund recovery penalty assessment and SFR cases, it's important to note that the appeal periods have not expired. So, for example, when a letter 1153 is issued proposing the assessment of the trust fund recovery penalty against a willful and responsible individual for payroll taxes, Well, there is a 60-day appeal/protest period before the assessment can actually be made. Well, if the revenue officer can demonstrate that, no, we need to assess the trust fund recovery penalty today because there is something that the taxpayer is doing in order to liquidate funds, move assets, things like that, that would jeopardize collection of the trust fund recovery penalty, then it can be accelerated under Jeopardy protocols. Jeopardy assessment is also when assessment and or collection action is being proposed prior to the return due date for a signed return. So, for example, a taxpayer may submit a balance due tax return yesterday, and the revenue officer may receive that. The tax return for 2018 technically isn't due until April 15th. But if the revenue officer has some reason to believe that collection will be in jeopardy, then there can be a jeopardy assessment on that filed tax return, even though it's not actually technically due for another 2.5 months from today. Okay, so that's an accelerated assessment. But note that that's different from a termination assessment, right? Because we're talking about a revenue officer here on the collection side, and there is actually a tax return. Whereas a termination assessment by examination, there's no tax return. So if there's an income tax return, collections will retain jurisdiction of the case, basically. Whereas if there's no tax return for an income tax scenario, then that needs to be coming from examination. And sometimes a revenue officer might jump their authority on that. Okay, that's one of the reasons why it's important to understand the differences there. And then refer to examination information that can lead to jeopardy assessment of a proposed transferee liability. Those are some special situations that we don't have time to get into today with nominee assessments in particular. Let's see. Stephen asked if I've ever actually seen a termination assessment in practice. No, I have not. I have never, ever actually seen one. I've seen Jeopardy assessments for sure. Like I said, especially for current and following quarter 941 liabilities. But no, I've never actually seen a termination liability. I would imagine that if your practice was more, remember I was collections work only, I would imagine you'll see termination assessments if your practice is more focused on the examination side, is where I would expect a tax professional to see that. Now, Robert had asked about how these are labeled and how the taxpayer gets notified. So let's talk a little bit about some of these procedures. So IRM 5143 talks about the report that substantiates the recommendation for any type of accelerated assessment. I'm not going to walk you through the actual form numbers. The IRM does include the step-by-step instructions to the revenue officer for like the forms that they're required to fill out and submit to their boss, okay? But this is what has to go on there. So obviously information that identifies the taxpayer, the tax, penalty, and interest computation. So they're doing a manual computation of penalty and interest calculation. They have to provide a description of the nature of the taxpayer's business or source of income. There needs to be a statement about the present financial condition of the taxpayer. Okay. If a revenue officer is trying to make a Jeopardy assessment, remember, there has to be substantiation that collection of the tax will be in jeopardy, meaning that the taxpayer is shuffling around assets, liquidating assets, disposing of money, something to that effect. Okay. If the taxpayer's present financial condition is dead broke and living in a van down by the river, then it's very difficult to substantiate a Jeopardy assessment because the taxpayer may have no income or assets. Okay. That's a very very what's the word I'm looking for? That would be a very egregious use of the Jeopardy assessment procedure if the taxpayer's financial condition is broke and homeless, right? They need to submit information regarding the taxpayer's activity giving rise to the recommendation, such as transfer of assets without consideration. So, for example, excellent question, Jacob. We're talking about property that the taxpayer might own free and clear, but everything that the taxpayer owns is subject to a statutory federal tax lien, even if a notice of federal tax lien has not been filed on public record in the county or state of the taxpayer's residence or where the property is located. Okay. The Internal Revenue Code issues a blanket statutory tax lien, and the transfer of an asset requires what? A certificate of discharge from the federal tax lien, including the statutory lien, with or without an NFTL. Okay? So if a revenue officer learns that a taxpayer is selling a vintage car that's worth $50,000, they came across it on an auction website for classic cars, okay? And revenue officer goes, whoa, there's no certificate of discharge. What's going on here? That may result in a Jeopardy assessment. Revenue officer must put together a package that includes statements regarding the viability of a business. You all remember the bridal store, the dress shop in Texas a year or two ago that the IRS basically descended upon the place and auctioned everything off right out from under the noses of the tax debtor. Now, that was a Jeopardy assessment and a Jeopardy seizure situation is what that was. Now, they handled it wrong out in the field, especially in relation to some of the stuff that some of the Dallas Police Department things they did. But that was a Jeopardy assessment and a Jeopardy seizure. That's what that was. Because they determined that the business was not viable as a going concern. Okay. So if the revenue officer thinks that the business is going to shut down, they need to support that recommendation. Filing record of the filing history of the taxpayer, a record of the taxpayer's delinquency, basically, nature and location of the taxpayer's assets and sources of income, a statement as to the factual basis for the determination of taxable income, and a schedule showing how the tax was computed. So revenue officer has to show their work. They got to show their math and any other relevant information that may have a bearing on the case, including future anticipation of gain or loss. All this needs to be put together in a formal package and run up the chain of command. Due to the urgency in Jeopardy assessments, the file is given highest priority for internal handling. Per Internal Revenue Code Section 7429A1A, IRS Chief Counsel or his or her delegate must approve all Jeopardy assessments. This gets an extensive review at every level of the IRS chain of command. Chief Counsel review of a Jeopardy assessment can be redelegated no lower than area counsel. For SBSE international cases, this authority is delegated to the Deputy Associate Chief Counsel within the Strategic International Program area. And no, there is no threshold amount, Jacob. So this whole package needs to be prepared by the revenue officer, signed off by, reviewed and signed off by their group manager, territory manager, and no lower than associate area counsel. Then after all those folks look at it, the letter that actually gets sent to the taxpayer, the actual letter that says, hey, we've done this review, we think there's something going on, that letter is actually signed by the area director. Okay. So after area director approval, it is up to a campus accounting function to enter in the actual assessment. At several places within this whole section of the IRM, there is a reminder to the clerical personnel, okay, to enter transaction code 570 into the taxpayer's account. TC 570 places a I don't want to use the word freeze because that actually has a technical meaning within the IMF and BMF systems, but a hold. I guess that's a good word. TC 570 instructs the computer to not issue a refund on credits that may roll forward from other tax periods or for the tax period in question in order to preserve that credit so it can be applied to the Jeopardy assessment. Okay. The reason for that is because I don't know why. This has something I'm sure to do with the antiquated nature of the IRS computer systems, but it takes 6 weeks for even a Jeopardy assessment to post to the individual master file or the business master file account for a taxpayer. And this whole Jeopardy process, by the way, takes place within a 7-day window. So when a revenue officer identifies a Jeopardy situation, this whole process takes place in 7 days. Okay, from RO to group manager to territory manager to IRS counsel to area director. 7 days. But it takes 6 weeks for the assessment to post to the taxpayer's account. So therefore, they have to enter this TC 570. Okay, and this is a transaction code that you can look for, by the way, on transcripts. So if you're doing a transcript review and you see that TC 570, that is an indication to you when you're doing your client intake process that there was a Jeopardy assessment or a termination assessment made against the taxpayer. Okay, that's how you can identify that. According to law, this is code, the IRS must send the notice and demand for payment within 5 days of the Jeopardy assessment being processed. Jeopardy assessments come with appeals rights, as do Jeopardy levies. They also come with tax court or district court rights, unless the taxpayer is in that situation where they have more than $10,000 of cash or cash equivalent that they're saying isn't my money. Okay, so in those cash situations, judicial review and appeals rights do not exist. Okay, important point. In these situations, there will be a notice of federal tax lien filed. Okay, part of the campus accounting function, the people that actually, the clerical department that actually processes the paperwork, they will enter in an entry into the automated lien system to generate the notice of federal tax lien. Jacob wants me to repeat what I just said. The part about the cash? Is that what you want me to repeat, Jacob? Before that. Jeopardy assessments and Jeopardy levies come with appeals rights and tax court rights. That's important. But those rights don't exist in a situation where the taxpayer, where the Jeopardy levy, the Jeopardy assessment is being made because the taxpayer has cash in excess of $10,000 in hand that they claim belongs to somebody else. Okay. So again, expect a notice of federal tax lien to be filed immediately, as well as a near immediate Jeopardy levy against liquid assets, which will usually mean that a bank account levy will rapidly follow the Jeopardy assessment. Another interesting point, it is actually the Collection Advisory Group, formerly called the Technical Services Advisory Group. It is the advisory group that actually coordinates Jeopardy cases amongst the various IRS divisions. And they are the ones that enforce this whole 7-day handling requirement.
For more resources to grow your tax firm, be sure to visit taxmarketinghq.com.